To determine whether SWPPX or VOO is the better investment option, it is essential to understand what each of these investment products represents. SWPPX is the ticker symbol for the Schwab US TIPS ETF, which tracks the Bloomberg Barclays US Treasury Inflation Protected Securities Index. This index includes inflation-protected securities issued by the U.S. Treasury with at least 1 year remaining to maturity. On the other hand, VOO is the ticker symbol for the Vanguard S&P 500 ETF, which tracks the S&P 500 index. The S&P 500 index is a market capitalization weighted index of the 500 largest publicly traded companies in the U.S. The key difference between these two investment products is the type of assets they hold and the investment objective they are designed to achieve. If you are seeking to protect your portfolio from inflation, then SWPPX could be a good option. The securities held by this ETF are inflation protected, which means their principal value will adjust to keep pace with inflation. However, if you are seeking to generate long-term capital appreciation and are willing to take on the associated risks, then VOO could be a better option. The Vanguard S&P 500 ETF provides exposure to the U.S. stock market and has historically provided higher returns over the long term than inflation-protected securities. However, it is essential to keep in mind that the value of your investment in VOO can fluctuate and you may lose some or all of your investment if the U.S. stock market declines. In terms of fees, SWPPX has a lower expense ratio than many other inflation-protected securities ETFs. The expense ratio for SWPPX is currently around 0.05%, which is significantly lower than the expense ratio for many actively managed mutual funds. VOO also has a low expense ratio of around 0.03%, which is one of the lowest in the industry. Ultimately, the choice between SWPPX and VOO depends on your investment objectives and risk tolerance. If you are seeking to protect your portfolio from inflation and are willing to accept lower returns, then SWPPX could be a good option. However, if you are seeking to generate long-term capital appreciation and are willing to take on the associated risks, then VOO could be a better option. It is essential to evaluate your investment goals and risk tolerance before making a decision and to consider consulting with a financial advisor if you are unsure.